Welcome traders to yet another episode of Nifty Analysis, episode number 9. In my previous video, I had clearly shared that if Nifty spot could not sustain above 11,700, then we could see either a sideways move or either we will see the Nifty spot retracing at three different levels. The first one was 11,440, second one was 11,300, and the third one was 11,170. And we can see yesterday Nifty has closed at 11,126, which is clear that all my three levels were achieved. Now, as per the current market scenario, we can see consistently daily, day by day, stocks are coming down, the indices are coming down. Now, the $1,000,000 question is that the rise which we saw on the good news, which was shared by a finance minister. Now, this particular good news, is it just a sell on rally sort of stuff, nothing more than that, or this is really going to change the structure of the entire trend of Nifty? Now, according to my analysis, what I can see is still Nifty is around very good support, which is between probably 11,150 and somewhere around 11,050. So this 100 points range is a very strong support. You can see these previous highs are acting as very good supports. Also, we can see that this 50 days simple moving average might act as an additional support to that existing candlestick cluster. All right. So point number one is that we are trading near a very important support zone. If you see in the RSI oscillator, there has yet not been a trend line breakdown, which would emphasize that the momentum has increased on the downside. So still till this point of time, although we have corrected from 11,700 to around 11,126, we are still relatively safer. Now let us move on to the weekly charts. If we move on to the weekly charts, what we can see is that this is the high at around 11,700, which was made, and this particular candle is a high wave candle, and basically high wave candle near important resistance is a sign that market is extremely overstretched on the upside. And immediately after that, we have a big red candle, which is not a good sign, friends. This is certainly not a good sign. So as of now, the entire structure of the market is in a decisive mode, where whether this is already a sell on rally stuff or have we started a new downtrend. According to my analysis, it would be very early to preempt this. I think if Nifty closes below 11,030 or 11,020, then we could have a clear structured new downtrend which has been into existence. All right. So if Nifty spot is able to close below 11,030, according to my analysis, if Nifty spot is able to close below 11,030 or 20 and sustain below it for a couple of days, then we could expect levels of 10,900, 10,800, and possibly even 10,650 levels. So this is the analysis of Nifty from my side. And one more thing, we need to be aware that the volatility is rising day by day. Volatility is not ready to come down. So again, this is a warning to traders. If you are initiating short-term trades, be careful about your position sizing, because you will find that the stop losses in each and every trade as of now are slightly larger than normal scenario. All right. So this is my advice for as of now. In my next video, I'll try to share even something more interesting. Till then, trade well.